Yes, I can. I'm using my
Okay.
phone. Things to work better than the laptop.
Yes, yes. Okay. Thank you so much.
You're welcome.
Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 2nd of June, and we've got Brent crude oil trading up this morning, a bit counterintuitive in some regards, given that OPEC Plus went ahead with their third big outcrease announcement, accelerated supply increase this for the month of July, having announced previously for an accelerated increase in May and then June, and now announcing for July. And this morning prices are up not only slightly, but up over 2%. Clearly, the market was expecting something different. I never really sensed that in the market last week, that the expectation was for more than what they announced. But nonetheless, the market's up in a hurry this morning. Let's kick off, as always, on a Monday morning with Omar Najia, derivatives trader at BB Energy. Omar, your thoughts on the decision by OPEC and the market reaction this morning?
So I think basically, 411 was the expectation, and 411 is what we got. But I think the reason why you're seeing this rise is twofold. First of all, you had Ukraine attack Russia in a big way, and you have the seemingly, peace talks, which are basically happening today, I think. So I think those are, now likely to go out the window. Putin will be under too much pressure, blah, blah, continuation of the war with Ukraine, which basically adds uncertainty in terms of supply, maybe sanctions, I don't know what, blah, blah, blah. So risks to the upside. The other point is that we also saw over the weekend, the Iranians come in and say that they received a letter from the US, and that letter was what the US thought an agreement is going to look like in writing. And the comment that I saw from Iran on an interview with RT is US terms are out of touch with reality. Iran views the written elements as extremely far from what could possibly be regarded as realistic. So on that front too, you don't exactly have the two sides making nice. So I think the market's erring on the side of higher. I'm surprised. If I think basically as long as we stay, WTI is trading around 62.50 plus or minus. If we stay below 64, then I'm still happy being short. But if we get to $65, then I think basically it's shorts will start to panic, and that's it. Where we head from there is anybody's idea, because if you break 65 to the upside, then you're talking about $70, and then you're talking about higher still, which would be amazing. But you follow the market, you follow what the numbers are telling you. So staying around here is good. Breaking $60 to the downside, we start to get encouraged. Breaking 55, and it's down the plug hole. Breaking 64, discouraged. Breaking 65, it's panic time. That's my view.
Let's welcome Jorge Montepecú, Managing Director of Benchmarks at Onyx Capital Group. Jorge, your thoughts on OPEC's decision to once again accelerate supply increase? It's not a surprise. Should we expect now that OPEC Plus are going to, the 8 countries, we have to say, we keep quantifying that, qualifying that it's not 20 odd countries. We're talking about 8 countries that are part of this 2.2 million barrel a day cut. They've now sort of reversed more than half of them. Would your expectation be now that they'll see through the whole thing, and that we should expect by the end of the third quarter that all of these cuts will be reversed?
Well, Sean and dear audience, my position has been that the numbers stated by OPEC and the group of secondary sources are neither credible nor real. But everybody that writes or essentially comments about what is happening in OPEC takes what I call the fake baseline as reality. The fact is that OPEC has been producing over what they have stated. So when they say they are increasing the quota, they're not, because the majority of producers are already producing at max. And the only few that could increase production even more, you can count them with maybe one finger, meaning Saudi Arabia, because the rest are pretty much at max. So the analysis by definition is all flawed, because the market by the OPEC members is producing as much as it can.
So this is really, they failed to bring production down to quotas. So now they're bringing production up to quotas. Ultimately, they're bringing quotas to production.
They're bringing the funny accounting to reality, little by little. But nothing is really changing in terms of supply, except from Saudi Arabia, who is increasing production. But
so when you consider 400 is the announcement in April and May, June, and now July, of that 400 quota increase, how much do you think is actually new barrels of supply?
Maybe 150, and that would be by Saudi Arabia. But Saudi Arabia is going into what I call this summer burn. And they may consume as much as 400,000 barrels a day during the hot summer months. So if you notice, already for 2 consecutive months, Saudi Arabia hasn't increased the exports into Asia. And I don't think they will very much this month, because they themselves need the crude to keep the electricity production up and the temperatures down in their homes. So the market, in my opinion, is tighter than it looks. But, and this is why the market has reacted the way it has, there was a huge prospect of an internecine battle between the producers by Saudi Arabia producing more and essentially spanking the Iran members. This was the background ahead of the meeting this Saturday that was happening in the past few days, where Saudi Arabia was threatening to increase production, not by that little bit, but going up to levels that would really reduce what they had voluntarily decreased. That was the fear in the markets on Friday. So Friday, the markets fell because the sense was in the air that the Saudis were going to go, we're just going to produce, because nobody's really helping us in maintaining the prices up. And as you know, everybody is suffering from the low oil price, from Saudi Arabia to UAE, who are raising a lot of money, and also even the US majors who are firing people and also selling assets and all of this. The beneficiary, of course, there is always one, is the end user globally. But that sense of that battle calmed down as soon as the statement came out, because the statement was essentially, we're just going to reduce, we're going to reduce the accounting, to bring the accounting up to where it needs to be.
So we're still just going to play the accounting game. We're not going to be doing anything that is fundamentally shifting the market. Omar, your thoughts on that sort of that kind of, clearly we're still a lot of headlines, a lot of noise, wars, tariffs, OPEC supply changes, and yet we're still essentially a barnacle on a $65 Brent rock. I mean, give or take a dollar here and there, nothing's really changing.
Nothing's really changing since the beginning of the year. And, I have a lot of respect for people who, watch OPEC and all this kind of stuff. But honestly, sometimes it seems like, a soap opera. like my cousin's sister said that she would whatever, but my cousin married the other one, and he stabbed the other one in the back, and only to do because they need to blah blah blah. So at the end of the day, I go with narrative is I think narratives come after. I like to look at prices. Prices undeniably are up. The other question to ask yourself is, never take a day or a morning and basically assess a market with the price action that's happened today. So you got to watch this. So basically, if a narrative is that OPEC no longer have spare capacity, only Saudi, blah blah blah, then we're going to 90, 100, 130, blah blah blah, and the market's going to skyrocket, right? Why? Because we know that the US is inflating. We know that the West in general is inflating. We know that China's stimulating. So we know that everything is inflating. So, if you look at US equity markets, they're going to go up. They're still going up. Whatever happens with tariffs and whatever, the market will be a buy on dips, and we're going to close a lot higher than we are. So if that narrative that OPEC is out of oil and only Saudi can put oil on the market and they don't really have a lot and all this kind of stuff, then market's going to skyrocket. So we need to basically watch and see. My view is exactly what I said. In very simple terms, below 60, I'd be looking for this market to create a lower, and above 65, this market's gonna, rise substantially.
And you're talking about WTI and those numbers.
WTI, yeah, which is currently trading about 62.50. So it's really, until it gets to that 64, 65 level, it's really not doing a lot. I mean, we started off the year plus or minus in February after Trump took office, etc. We started off the year around here, and we've basically done very little. Oil is very cheap in real terms, but I think it's the only deflationary kind of lever that anybody can push. And with all the kind of inflation that we've seen or that we are going to see everywhere, including the US saying, we're no longer going to cut expenditure, we're going to grow our way out of the debt, I think it's looking very ominous. So we wait and see, follow the numbers.
Jorge, as we move into the second half of the year, and of course the announcement on Saturday was for July, which is the first month of the second half of the year. But if you take the narrative as you articulated, that these are fake sort of increases in the sense they are essentially quotas catching up with where real production is. As we move into the sort of the second half of this 2.2 million barrel a day supply increase, quota increase, does that become more real? Does those supply in the next round of increases and the next, are they still fake, or as we go into the second half, that these increases actually become a real additional supply and so a greater downward pressure on prices?
Well, I like the comments about this being a soap opera. Maybe that's a little disrespectful, but it does feel that way. But let's go a little bit into those issues. The UAE has announced that it will actually reduce exports. They made an announcement in their official website changing the numbers. And they're the country that has been under a lot of pressure by Saudi Arabia to essentially produce more in line with what they were supposed to be producing, rather than just having a number that is for public consumption while exporting a lot more. So I feel the other way, that in itself, this wall of production coming in, actually, there may be a little bit more discipline in the market in the coming months. And that Saudi Arabia is not ready to flood the market, but is being very careful about releasing in line with what the market demands. Trump
expects ultimately the market's got used to this 3 month each month sort of accelerated increase, but it's still in alignment with the announced agreement that was announced a year ago, I think, nearly, when they first put out this supply return plan. So it's still within the corridor of what was announced, what was agreed. It's accelerated, but at least it's what the market expects, the market knows, and it's not a surprise.
Yeah, and my position is that the market is misinterpreting all of this data because the narrative has been fake for so long. And, and I was thinking that OPEC needs to come out of that one. And I was thinking just by myself, right? How can they address these issues and align against with reality? And I think the only possibility they have is by saying that there have been technical difficulties with the numbers and issue what the real production is, because nobody can analyze. And it is clear that because of this fake narrative, prices were higher than they should be. But markets are not dumb. They eventually react to supply and demand, and there was too much supply and prices fell to the 60s. And if not, as we saw for a few days, to the 50s. Now, the markets are actually a little bit tighter than all the narrative says. So that's why we are coming up towards the 65. But essentially, nobody can analyze anything, because if you have OPEC with essentially fake narratives, and then you have Trump pulling whatever lever that blows up on his face every couple of days, it's like, how can you do a long-term analysis on this? I was talking to some people from Saudi Arabia, and they said, and I am with them 100%, our analysis can only be like for the week ahead. We cannot really analyze things for the next 6 months to a year, because the data keeps on changing and the pronouncements by Trump are always altering the market. So where are we right now? We are heading into a summer that may be tighter than expected because of the summer burn, maybe because of some more discipline by the UAE. And please note that the UAE is going to burn refine more Murban at the Ruwais refinery and change it into UZ for the exports. That will change the mechanics of Dubai. Those are real things.
And also, you're seeing real announcements for sort of curtailing increased investment in the shale basin, in the Permian Basin. There's some significant cutbacks being realized there from the point of view of new supply or even maintaining existing supply.
Correct. So the line for the long term has started to change up a little bit. The big downside, and here's where Trump comes in, is that he can wreck global trade so much that factory demand decreases, shipping demand decreases, all these things that put people on edge. So, but other than that, the line for oil itself is healthier than it has been for a while. Because, and I like to say this phrase because it is so true, there is nothing like low oil prices to cure low oil prices. And we are in that phase right now that in the upper 50s to low 50s, some allocation of capital is going to be cut, where the majors are now watching their purses and saying, what do we need to sell? Which markets are being affected? And they're already in a reduction mode. So the seeds for a recovery have been already planted. If in addition, as noted earlier in this presentation, Trump and his administration decide to print actually rather than grow, rather than address the deficit, then we're in an inflationary environment. So Bitcoin goes up, gold goes up, and eventually oil will go up. It's not that people get wealthier, but the nominal number for oil will go up.
Let's go to the survey question, which sort of gets to the sense of expectation that the continued commitment, OPEC Plus is likely to continue with reversing the rest of the 2.2 million barrel per day cuts through Q3. Agree or disagree? The OPEC has done essentially more than half of this 2.2 has already been reversed, and the rest of it will be reversed in Q3. Agree or disagree with that thesis? Omar, we talk about supply there ultimately, and the OPEC Plus policy, whether facade or real. This is about a supply management. But what about on the demand side? The Trump tariffs, we're now in this pause, this suspended window. We're in the last few weeks of the 90-day pause that could once again disrupt global trade, disrupt, I suppose, economic health, and so demand for energy going into the second half. Your thought on the demand side and the outlook for it with the Trump tariffs still lingering as a space?
Okay, so my narrative is a little bit different, right? I don't think that supply and demand changes every day or every week or every month, but you can basically measure in any meaningful way and say, oh yeah, supply went up to 2.1, therefore the price went up, this week or last week or the week before or whatever. In essence, any measurement that you want to do about supply and demand, by definition, has to be backward looking. So the fact that you want to project it into forward prices, I think is problematic. The other thing, I think basically what's driving this market, what drives all markets, is basically sentiment, right? So we saw oil prices take a nosedive April 2nd. Why? Because sentiment was very negative. Why? Because basically you had a market that was expecting, a small little price skirmish in terms of the global economy, and they got like a nuclear war, right? So we saw prices move on WTI from about 72 down to about 55 in a straight line from April 2nd to April 8th. Yeah, that is nothing
and that
to
did
do.
transpire into
But
actual, less
but hold
ships
hold
going
on.
across the Pacific
No,
and trade volumes down.
It did it in 6 days. I
No,
guarantee you, it did it in 6 days.
no. But I mean,
So
through
this
the
is
expectation, the
no.
expectations.
The narrative then became, oh, it's going to ruin, blah blah blah. So you had $72 on April 2nd. You had $55 on April 8th, right? So supply demand didn't change, but the price moved massively. Now, what we've had since then is essentially the price going sideways. And the price has to decide if we go back towards the highs or we go back towards the lows. So all the narrative that we've seen from April 8th to June 2nd has basically been sideways price action. Yes, no, yes, no, yes, no. Why? Because sentiment is undecided. It's going to be great. No, it's not. Yes, it is. Yes, no, yes, it is. No, it's not. Nothing to do again with supply and demand changing and we're going to produce this much or that much or whatever. Just sentiment. People react on sentiment in any market, oil included. So the real question is, I don't necessarily disagree that basically this market is eventually headed a great deal higher. In fact, that is my kind of outlook, a great deal higher, basically because there is no option apart from printing, and the stuff about growing and whatever is just a load of error. You can see they need to sell, they need to refinance, they need to sell their treasury bonds. They need a great deal of money, and we're talking about epic amounts of money, like 9 trillion plus 2 trillion deficit, so a massive amount of money. So this market is going to go a lot higher. The only question is from where? Do I believe basically that, now going into summer, that you could look at this market and say, right, we're going to roof, that's it, the lows are in, blah, blah, blah? No. Do I think basically that it could do that if it basically does some stuff on the screen that I can see in terms of sentiment changing, etc.? Yes. But right now I am undecided because the price action is basically absolutely sideways. From 2nd to 8th of April, you had a massive move lower. 8th of April to now, you've had sideways price action. The market is undecided. And if it breaks to the upside, it breaks 65, it has a view, it's confident to the upside. And if it breaks 60, it's confident on the downside. It hasn't done either. Once it does, I would join that move, upside or downside. I have no kind of, bias, and my bias is basically just to try and make money. I don't care if it's higher or lower.
Jorge, on this sort of analysis of your previous comments, you mentioned that secondary sources were also part of the not quite correct or accurate data being presented to the market. Did I understand that correctly? That because that's obviously, I think, about 10 independent companies providing secondary data on supply to the OPEC secretariat.
Yes. They're under pressure to produce numbers to the downside. There are even cases I heard 3 days ago of shipments being measured as min cargoes. It's a term that they're not full at load port, but then showing up at discharge port filled to the max. So there is a lot of data. I'm going to be very straight here, data manipulation to project a market that is not producing as much as the world requires, and data manipulation to show quota adherence. During IP week, or IE week as it's known now, several of the secondary sources came to me directly to complain about the pressure they're under to produce essentially docile numbers. This is a very strong, it's not an allegation. I heard it directly from the sources, but this is what creates essentially a narrative to the upside, which is not warranted by the actual activity. And then you have major corrections because the market, as I said, the market is never done. It eventually finds out. So there is a need to clean up the data coming out from the secondary sources, but there is also a need to clean up the data that comes from OPEC itself. OPEC actually doesn't need secondary sources. They know exactly what they're producing. They need to bill the producers. They need to get paid. They know exactly to the last barrel how much is coming out through their export facilities. But they like to, mask it a little bit and pretend this and that. But eventually it bites you because the market reacts to real supply and demand.
If we look at that, just looking forward, Jorge, we had the discussion earlier about the attack, the Ukrainian attack on Russia over the weekend. I mean, there's attacks every day, Russian on Ukraine, etc. But this sort of announced one. But the lingering in the background here is another sanctions bill in the Senate, which has about apparently over 80 senators' signatures ready to put 500% secondary tariffs on countries buying Russian oil if indeed Putin doesn't come to the peace negotiating table or agree to a ceasefire or some indication thereof. Finally, essentially pulling the rug out from under Trump in his policy of the last few months. Your thoughts on the outlook for that as a strategy, as likely the outcome and how significant it could be?
Yeah, I give it an actual zero outcome because the tackle term will come into place, right? Trump, again, chickens out because he knows that if he puts in a lot of constraints on sovereign countries, because Russia is independent, India is independent, China is independent, that the only way to enforce those sanctions is by having the US Navy selectively do something or other. But if you do that, the oil price will scream up, right? $100 is nothing. Then that will bite him in America, where he wants low gasoline prices. Therefore, he will tie himself in knots and do absolutely nothing because he actually wants low oil prices. So zero possibility of those things really being implemented.
And you would then sort of extrapolate that zero possibility of Putin changing his current strategy of continuing to engage in the war, and that war rumbles on despite the efforts, or what appears to be the efforts of the Trump administration. Well, we're going to have to leave it there. The view in this room is that expectation for OPEC Plus to continue with reversing the rest of the 2 million barrel a day cuts through this third quarter. And I suppose whether it's a circus or a performance or it's a choreography, ultimately you'd have to say OPEC Plus has to be pretty happy. 3 months of increasing accelerated supply and prices still holding at $65 more or less on Brent. you would think that's a happy outcome. And if that continues for the next few months as they get this 2.2 back on the market, I think come the end of the third quarter, they would be pretty pleased with that outcome. But a lot of the forecasting is that the real weight of this extra supply will be felt in the, as Jorge mentioned a few times there, the market really feels and tastes the physical barrels eventually, and that the second half of the year, that's what will happen. That's a lot of the forecasting now. It hasn't happened yet. We'll have to see if it comes in the second half. Jorge, thank you so much for your time and engagement today. Omar, as always, Monday morning makes it special because you're on it. Thank you. Have a great week, everybody. We'll catch up with you tomorrow at 10:30 UAE time. All the best.
Thank you.